Monday, June 18th, 2018, Monaco 64, home of alternative economics and contrarian views. So this morning I want to talk about Triffin's paradox, gold standard, trade imbalances, and of course look at the markets as well. And I might have found something that might explain why gold and silver were raided on Friday by the bullion bankers and the central banks of the West. And why do I say of the West? Well, because I think gold is definitely flowing from west to east. That's where the gold is going, really. All of it? No, but a big chunk in the last few years. So, yeah, let's quickly go through the prices this morning. It's just before 8:30 a.m. London. So what do we got here? Gold, it's basically unchanged, just under 1280. It's 1279.20. Range has been 1276 to 1282 overnight. Silver is 1652, down about 3 cents. Range has been 1649 to 1661. The Dow Jones future is down 131 points, just 24,956, though down 0.5%. S&P 500 is down 12, also just about 0.5%, 2768, and the Nasdaq 100 future is down 40, also 0.5%. So stock market's broadly lower this morning. The currencies, while the pound is down about 1/3%, 132.35. The euro is also down 1/3 at 115.72, and the dollar is down slightly against the yen at 110.54, down about 0.1%. CNBC, usually don't look at them, but it says Asian shares decline after escalation in U.S.-China trade tensions as oil extends losses. So yeah, the markets are a little nervous right now. All this talk of trade war, tariffs, retaliation by the Chinese, back and forth, tariffs against European countries. G7 didn't go well. And before I go into Triffin's paradox, trade imbalances, trade deficits, and the gold standard, I'll talk a little bit why I think they might have raided gold on Friday. And why on Friday? Well, I was looking through at the INE, International Energy Exchange in Shanghai, because I saw that on Friday, the September contract traded 182,000 lots, which is quite good for a new contract that's only been around for just over 3 months. And then I went to check again today how it's done, and it hadn't changed the data. And I thought, well, how come it's not traded today? Well, I realized that I looked at on Google Chinese public holidays, and I noticed that today, June 18th, is the Dragon Boat Festival holiday, and it's a national holiday in China. And even CNBC notes, markets in China, Hong Kong, Taiwan, and Indonesia were closed on Monday for holidays. So what's it got to do with the gold move on Friday? Well, maybe it's because we're approaching some kind of event. And the West, the bullion banks, they need cover. So they needed to bring the market down, and they needed to do it late on Friday because China was out already. By the time it happened, Chinese markets were closed on Friday. Then today, Chinese markets are closed, so they've got the markets basically to themselves. Am I saying the Chinese are not doing much today? They probably aren't. So it's made it a lot easier for them to do this, knowing that China and Hong Kong would be closed. So just an idea there. As far as the Triffin's paradox, well, Triffin was an American-Belgian economist in the 60s, and he said that under a fiat money monetary standard, like the US has, the country that has control of the money, i.e. the US right now, the Federal Reserve, they provide other countries that are within the system, which is everyone, they need to have reserves of that currency in order to function. All other fiat currencies in the world are based off the dollar. If you don't have dollars or Federal Reserve notes, you can't function in today's economy. So what do you need to do to accumulate dollars? You need to undersell U.S. products so that you sell more to the U.S. than you buy more from the U.S. So you have reserves of dollars, and that's how you build trade surpluses, and that's how the U.S. builds trade deficits. And it's the only way. It's the Griffin's paradox. But in a free market, gold or silver, how can I say, standard globally, the only way to pay for goods and services across borders is with gold and silver. And gold and silver extinguish that. But the present system is based on that, because the money is that, fiat money is that. So you can never extinguish that, and the Americans keep printing and printing money. So and other countries keep competing and lowering their costs, trying to compete with America, and that creates more and more deficits for the Americans, surpluses for others, and you're never able to settle, because there's no extinguisher of debt. It's called the irredeemable money that can never be paid. So I've seen an interesting, and I've talked about this before in my videos, in relation to President Trump as well, because during the campaign, apparently he had Judy Shelton, who talked about this, an economic advisor to candidate Trump at the time. She said that with a gold standard, you wouldn't have trade imbalances and we wouldn't have these problems. It would be based on real things. And why real things? Well, because gold and silver for thousands of years have been the best store of value. Even, they require a lot of energy, capital, labor, effort to be extracted from the ground. So it's their money. So it's not fiat money where governments anywhere in the world, they can willy-nilly print it, like in the US, and it disrupts the whole system. It's not based on reality. So yeah, interesting article then this week that's been written by Hugo Salinas Price, Mexican billionaire. I actually met him once at a gold conference in London years ago while I was still in the city. One of my colleagues and I worked with, he got some tickets. It was an FT conference. I know I don't like the FT, but I went and he was there. And he's a proponent of silver. And his article, just recently written, was published. It's been published in Silver Doctors, Zero Hedge. And the Zero Hedge one says, on Donald Trump's madness and a new gold standard. So what does that mean? Well, he's talking about the same thing about Triffin. Basically saying that by Trump trying to rectify the trade imbalances, he's trying to create something where the U.S. has no more trade deficits. So how can you function in a fiat money monetary system for the world based on the fiat dollar if the U.S. is not creating any deficits? How will countries operate if they can't have dollar reserves? And his guess is that maybe the final outcome will be a reversion back to a gold standard. And that's a good point. Interesting. I'll put the link below in the description to the article from Zero Hedge. You can have a look. So what else? Yeah, I just wanted to talk about how I think people really need to get out of the system. And by getting out of the system, I don't mean living up in the mountains in a cabin, but what I mean is not participate in the banksters' game of being in these markets. The other thing I wanted to show you is, I've done this before, but just to show how the system is really been corrupted. Here's a £5 Bank of England note. It's the newer one. I mean, a few years ago, and it's become smaller. And on top here, it says Bank of England, and I can barely read it now. It's so small. It says, "I promise to pay the bearer on demand the sum of £5. And £5 of what? I mean, if you call the Bank of England, they say that they'll give you a new note if you bring an old note in. It says right here, "I promise to pay the..." But in the past, what that meant was that this was a promissory note that you could pay with this. You could go and take 5 gold sovereigns, which is still nominally £1. Gold sovereigns worth more than £200 now, of course. So you could go to any bank or the Bank of England, take that, and they'll give you 5 of these sovereigns. But nowadays, this is just like a fraud. And that's why I tell people, do we really need regulation in cryptocurrencies or anything? If the Serious Fraud Office in the UK, if you call them and you talk to them about that, they'll completely ignore you. If you call the FCA here, which is the equivalent of the SEC, they'll completely ignore you. If you call the Bank of England, oh, they'll just give you a lame excuse saying that if you bring this note in, they'll give you a new one. I mean, why don't they say, we'll give you a new note if this one is damaged? That's what it is. It's not a promise to pay, because it's not a promissory note. So there you go. That's the little tidbit for the day. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on DTube, Steemit, and on Twitter. And I'll talk to you later. Take care. Bye.